Hey.
All right, we're streaming now on the YouTube. I'm back. I took last week off. I was in a very medium important meeting. That being said, it's great to be back, guys. Welcome to Coach's Playbook. We're serving up something that we got a lot of questions on yesterday during the recap, which is specifically how to go about trading trending markets. Now, even though I think everyone who's been in trading for a little while knows that that's the right way to trade, it's one of the hardest things to do. In fact, the biggest problems that I see sort of beginning retail traders running into, or the whole retail trading order flow in general, is that they're trying to trade against the trend, which kind of makes sense if you think about markets in their purest form, what you're willing to spend on anything like an auction. You want to sell something that seems to be getting more expensive, and you want to buy something that seems to be getting less expensive. But that's a habit you got to kick to some extent, or even pick and choose your spot where you do it. So I thought I'd let Dan kick it off since he got those questions with some of his thoughts on how to get in a trending market.
Yeah, absolutely. So trading trending markets, like Jack said, it is definitely, how many people the first week of trading, they've heard trend is your friend, right? I mean, that's a common thing we all hear. We say it all the time too, but it is really difficult. Yesterday was a prime example of a day that we all wanted to be in on the trend. We wanted to go with the trend. Unfortunately, the trend was really hard to get in on. So that's the first thing we have to kind of accept is if we're not finding a pullback that we're comfortable with to get in on that trend, it's okay to miss out. I can honest to God sit here and tell you when I am day trading the trend, I have a hard time with because we only have a small period of time to look for those pullbacks to get in on that. So first things first, if you struggle getting in on those trades, don't feel bad because you're not the only one. What I'm looking for is I'm looking at a 30-minute chart more often than not. Maybe sometimes I'll bring it to a 15-minute chart. I'm looking for the 1 to 2 candlestick pullbacks that are showing me where I'm starting to want to have that inclination to go, oh, maybe now's my chance to short. Once I start to recognize those thoughts, that's where I'm actually saying, okay, here is our little bit of a breakdown. Here's our weakness in this trending higher market. This is now my point. I'm going to go ahead and get in on this trend depending time. That's where I think with day trading, we want to be cautious. Getting in on that trend after 1:30, 2 o'clock Central Time, I strongly suggest being cautious there. If you didn't get in on the trend yet, that tail end of the day on a trending day, we see it a lot. We saw it yesterday with some of these markets. You see that profit taking coming into place. So those are a couple things that I'm really trying to keep in mind. I'm looking for the pullback, the little bit of the breakdown in the directional move, followed by getting in on that market and what time it is to get in on that market. Those are a couple of things I'm paying attention to. And like I said, I'm really trying to, when I'm day trading, I'm looking between that 30 and maybe down to a 15-minute chart.
Yeah, that afternoon's a choppy time to trade. And generally, when you see things trending, they've already established that trend. So you may have missed out. You can't force trades, especially when you're running against the clock. You never want to be trading with a time limit. Well, unless it's your own time limit that you've established. So, Mick, did you have anything to add about how you go about this?
I do. Really well said, guys. Before I speak my piece, I just want to give our trader shout out to Stephanie Arahu. She's up about 5,500 trading the NASDAQ right now. You guys had great points. The trend is your friend, 100%. I think most people that are day trading make the majority of their money catching a piece of the trend for the day. If the market's going up, you want to buy it on a pullback. You don't want to be buying new highs or selling new lows. Certainly you can do that, but there's more risk, selling something in the hole or buying something on the high upticks. I really like what you guys said about, if we're trending up all day, going long later in the day. As the trading session goes on, your odds of continuation decrease dramatically. Now, there's no no obvious thing, that the markets could always continue higher into the close, whether there's profit taken or not. We could have an up day and then still see rallies into the close, but the odds definitely decrease. I personally like, looking at opening range. We have our overnight session. There's a lot of hours traded there, but I think the main the good hours, the meaty hours of trading are when the volume is there, and that's about 7 a.m. Central Time to 11 o'clock a.m. Central Time. It's where you have the most participation. You can look at that on, pretty much any market out there that's traded. You'll see that that's when the highest volume is there. As far as, trying to catch the trend for the day, look at the opening range, see where we're at after the opening range, or when the volume comes in at 7 o'clock. Stocks open at 8:30 Central Time. That's fine. I like that. But I always consider the start of my day starts at 7 a.m. because that's when you start seeing the volume flooding in. And, are we going up or down? And I think, catching a piece of the trend for the day, you might only get one little pullback. Danny mentioned 1-2 candles down on a 15-minute chart. Sometimes you get a couple, sometimes you don't get any, but you'll usually, if we're trending for, up or down, you'll see a pullback or you'll see a little rally. And those are your low risk entry points to get in on that market.
Yeah. Things get more random when you're trading that power hour, or whatever they call it, at the end of the day before the close, because there's a lot of big money people come in there too, but it's less clear that they're not looking at the same things you are, and the profit taking is something that definitely, when following the trend, is going to be a pretty big headwind on most of those things. Mm-hmm. But there's a lot of random stuff that could happen as far as people just taking profit, balancing, evaluating things differently. It's just not the best time to be trading the trend. JD. Oh, wait, Mick is.
I want to interject just before we kick it over to JD. My own personal experience, trading in the afternoons coming into the close, I've gotten burned a number of times doing so. And I have to say, from personal experience, there's nothing worse than giving away a good trading day in the last 10, 15 minutes, just because you thought you might have seen another opportunity. I'm in the camp where, after donating, thousands and thousands of dollars back to the market, hard-earned dollars, I like to sit on my hands during the close. Come the time of the close, I've already pretty much done what I was going to do for the day, whether I'm up or down. And I like to sit on the sidelines and just see what happens and, plan for the following day.
We would always trade hedged positions at my place, but oh my God, on more than a handful of times, you get in trouble in a slow market at the end of the day, fading a few outrights or something after a move that you think is like, oh, this is just chop at the end of the day. It'll come
here.
Right
we'll make
back.
up a couple bucks, pay for lunch this week type thoughts.
Yeah. And then the market would close, would reopen, and it would be another 10, 15 ticks in your face. So take it for what it's worth. JD?
Same boat. I've never had luck.
He's just gone through life. I am a unlucky man.
No, if you're up in the morning, just get out. Don't even bother with the afternoon session. Most of the time, it's not worth it. As far as trading the trend, picking up a good trade, trying to follow the trend during the day. I look for a lot of simple stuff, technical chart patterns, continuation patterns. If you notice you're in a bull trend, look for those flags, look for those rectangles, pennants, triangles, anything that signifies just a small pullback that you could get into with minimal risk. I also like looking at moving averages quite a bit. I've talked about this a whole lot. If you look at a daily chart of the S&P, going back to June, you could have bought the 20-day moving average every time it hit there and never taken any heat on it at all. But from a day trading perspective, Dan talked about the 15-minute chart. You could break that down to a 5-minute chart, even if you're really just
being a spicy boy.
Yeah, I know
yeah,
guys.
Baby.
I know guys that would crush it. I knew guys that would crush it trading a 1-minute chart too. It's all about personal preference when you get to some points during this. But yeah, technical patterns for pullbacks, moving averages. Those are my bread and butter.
Yeah. And it's different, if you're trading spreads or repo trades or like some other stuff, afternoon is fine. And then those are also more mean reversion trades a lot of the time. But if you're trading outrights, man, just make it easier on yourself. I kind of want to get into how you then get out of those trades, because Mick was going to talk a little bit about divergences. What do you guys do as far as your stops on these trending trades? Do you kind of keep them ride or die, or are you trailing them?
Well, if you're looking at a swing low to get in, that's also something I'll take a look at. Swing highs and swing lows. If I'm getting in at a swing low, or if I get in around a swing low, I'm looking at the previous swing low as a stop. So you got to make sure that you have enough powder in the basket, as powder in the keg, to take a little heat if you need to.
Yeah.
Yeah, I personally, I like getting in around swing lows. If the market's going higher and we test the swing low, I mean, and I emphasize the word test. I mean, these swing highs and swing lows are really good areas to determine, are we just testing this level and we're going to kick back up, or are we testing this level? Well, it doesn't turn out to be a test and we blow through it. I always think that things can be bought inexpensively around swing lows, or sold inexpensively or sold at a good value around swing highs, depending on which way you think the market's going. You really, getting into a trending market, it's dicey when you start talking about risk and where you keep your stops. Because if you're, I like talking about things where I've screwed up personally in my own trading. Buying a high or selling something in the hole. So many times, I put my stop somewhere where I should be getting in, because I was just chasing the market. I like calling it chasing the carrot. A lot of times, this has happened to me. You get stopped out really where you should be putting it on. As far as trailing a stop, I mean, I like saying, anytime you put a trade on, you need to know where you're getting out if you're wrong, or have an idea of where you're getting out if you're correct. Obviously you can leave runners on if you're right. But you can, I don't like the automated trailing stops. I think, manually moving a stop in my favor to, break even or protect some profits is good. When it comes to moving stops or trailing stops, I like thinking about it from a money management standpoint more so than a price standpoint. If I am up $4,000 in a trade, well, I want to make sure that, I'm obviously right. I need to get paid on that trade. I'm not going to let more than half of that $4,000 slip away from me. So at that point, I'm not really caring so much about price. I'm caring about the money management. So I'm going to move my stop to somewhere where, hey, worst case scenario, I'm up 4,000 in this trade. I got to walk away up 2,000 at least. Keep half of my money on a good trade. That's kind of, that money management comes into play for me. And what I talk to my traders about when you're up significant profits. You never want to let a $4,000 winning day turn into a day where you only walk away with $500.
Yeah. I think people get, I think I've heard people talk about having problems with sometimes being too aggressive. You can be too aggressive, obviously, with the trailing stop. And I think a lot of people, when they're doing the trend thing, kind of fall into that trap. I kind of like the way you described it, Mick, of, moving it to certain levels, based on either money management or just levels that then you'd be like, okay, I'm going to get out here, as opposed to just having a ride X amount of ticks behind it on the way up.
Yeah. And that's totally perfect. Personal preference. It might not be right for everybody. It's what's, worked for me and what I like doing. Because, when it comes to trailing stops, I love the idea of moving a stop to break even. Realistically though, you got to give these markets some room to breathe, depending on what your time frame is. It's good risk management to move a stop to break even as soon as you can, but more often than not, you're probably going to get tagged on that. And, you get out of a position that was probably, might be a good position, and that stinks.
Yeah.
I'm on a similar page with Mick on this type of stuff too. When I get into a trade, even if it's a trending trade, the first thing I'm looking at is saying, okay, here is where my target is. You guys have heard Mick say this a lot. You don't have to take the whole move. Your job is to take a piece of that move. And I really think that stands true. Now, if you're in a trending market and you got a great buy and we're trending higher and it just continues to go, by all means, I think that's a common thing that people do struggle with, is letting those winners run. Here's what I would do. First off, I'd watch that market get to that initial profit target. Maybe I won't have a working profit target up there, but I'll be manually watching this trade. If I can move through that price, I'm going to wait for the next pullback. Once that pullback proves that it was just a pullback and the market looks to trend higher, continue our trend, that's where I'm going to start to bring my stop up a little bit. Now, If that market, that pullback is not an actual pullback and we're starting to change directions, you have to be quick on the trigger and accepting wherever your P&L is at that point. So long as you've been managing your risk up to that point, you should be okay. You should be quick to accept that's enough. Take these profits. And this winter is not going to run for me. Maybe the pullback's too strong for you. Maybe it is just a total reversal at that point. Totally feasible. But as long as you're there, you're in the profits, you're content with the profits you have. That's all that should matter. Missing out on a huge chunk just because, S&Ps ran another 20 points, but you got your 20 points. Forget about that extra 20. It doesn't matter. That was not within your system. And I think that's one of the biggest things that people struggle with. They see these big moves and they add up the calculations and say, man, I could have made $4,000 a contract there. I heard it twice yesterday. But you didn't, and that's okay. You still made great money.
You can't expect to be clairvoyant. Like
Right.
I sometimes think too, like, man, if I could just go back to 2007,
absolutely,
I'd be the
Hell,
richest
if I
man
could
on
go
earth.
back to March 2020, I'd just buy everything and sit on it.
Yeah, I hear that stuff.
2020.
I hear that stuff every once in a while, and it's like, come on, everybody's, a millionaire or a billionaire in hindsight, but you got out and you made your money. I mean, if you get out of a trade, you've got a reason for getting out of the trade at the minute. So, why are you giving yourself a hard time or upset about it, in hindsight, because the market kept going? You got in, you took your trade, and, unless you just didn't have a reason to get out, you can't be unhappy with that.
Yeah, I would have written every Post Malone song if I could go back a few years ago.
Right. So that's my point. Be happy with what you got. If the trade played out in the way that you planned, as we've said it 1,000 times on these, have a plan going into the trade so that you aren't making those decisions once you're in. If it plays out that way and you missed on another 20 points, who cares? You had a great trade. It was a successful trade.
Yeah. Big time. Couldn't agree more. More.
You're only going to catch that ripper, I'd say, statistically, once out of every 50 trades, if you're lucky.
That's what makes it a ripper.
Yeah.
Right.
Can't be ripping all the time.
It's
absolutely
for sure.
Yeah, people that aim to hit singles, every once in a while they catch a home run, or hit the home run. I shouldn't say catch that; those go over the wall.
Yeah. So does anyone have anything else they want to hit on here as far as the trending markets?
No, we just got Tanya saying hello. So hello to you, Tanya.
Hello, Tanya.
And we mentioned this last week. I'll mention it again. If you guys do have questions, whether about this topic or there are other topics you guys want us to touch on, let us know. Drop them in the chat. Drop them in the comments. I'm checking on the comments as much as I can. And we'll make sure we touch on anything you guys have there.
One last thing I want to add, as far as, trends and stuff like that go, it wouldn't be a bad idea to look up some stuff on momentum and oscillators and, try and, educate yourself about those and utilizing those as a potential tool. There are certain occasions where you could see prices making new highs while momentum might not be making new highs. And I think it was Danny that talked about potentially a change in the trend. Momentum's not a bad thing to, kind of give you a little indication if, we're seeing new price highs, but momentum's not making new highs, that could be an indication of a trend reversal. So there's a lot of different ways to monitor that kind of thing. So educate yourself on it a little bit. Highly recommend it.
I think that's a good place. Dan, you got a quote for us? Or are we
I do. I got a quote. Apple is launching their new iPhone 12 today. And so I thought a Steve Jobs quote might go well with that. And I kind of like this one. It has to do with, I think goes well with the concept of trend. Steve Jobs says, I'm convinced that about half of what separates successful people from the unsuccessful ones is pure perseverance.
I think he's lowballing there. It's like, yeah. Well,
how much cash on hand does Apple have now?
I think it's in the
it was a couple of years ago. I feel it was like 200 billion. I don't know if they've been added to that or
They have. They are.
I think they're way north of that.
Yeah, I think they're pushing even bigger.
Well, that's the great thing too. They didn't even have to spend it on their stock buybacks because they just lent money at the same rate as like the Treasury Department. There's some advantages to being the biggest well-capitalized company on earth.
As of 2020, Apple still has 200 billion cash on hand. Gotta love the Google machine.
That's a lot of iPods. Yeah.
Yes. Siri.
Right.
Well, anyway, we'll try and get a piece of that money and see y'all next week. Maybe we'll have Hogue back then, but since he's not here, I'll just go ahead and say trade well, everybody, and we'll see you then.